Everybody, Spartan here from SpartanTrading.com. I want to hit you guys with a little educational video this week. And in this video, I want to talk about a question that I get all the time. And it is, what is an outside week or what is an outside day? What's an inside day? How do you recognize this? And, how is it useful? Now, super simple to explain what these things are and actually how to recognize what's going on. This should help you recognize when the market's going to be choppy or not, when the market's going to be breaking out. This can help you recognize when sectors are breaking out or they're going to be stuck in a choppy environment intraday. It's a very good tool to use. Now, you can use this intraday trading where we're going to just look at the day to day to see whether or not something's trading inside or outside. Or you can use it on a swing basis and look at a week time frame and a month time frame. We'll look at everything right now. So when I say, or when someone says, it's going to be an inside day or it's going to be an outside day, what they're referring to is the range in which, for instance, the SPY was what I typically look at for the market, is trading within. So if I'm looking at the SPY, you can see this green line and this purple line. Now, the green and purple line are last day's high and low. So this is the range of last day. Simply put, if the market is trading within last day's high and low, it's trading inside. It's going to be an inside day because it's trading inside of last day's range. If it breaks out of this level, it's going to be an outside day. Now, the characteristics with an inside day and an outside day are different. An inside day is typically more choppy because you're stuck within a range. An outside day is typically more momentum based, a lot more follow through because you're trading outside of that range. Typically, you have room to the next resistance on the upside or the downside. If you look at, for instance, the day before last day, we'll look at that high and low. And you can see that the market was indeed in the morning trading inside of this range, this high and low, but ended up breaking out of it and it ended up turning into an outside day. And you can see the amount of fall through the market got. Whereas today, the market was trading between that high and low, the green and purple line, and you can see that it was quite choppy and stayed pretty tight actually on last day's close price. So different characteristics, different types of day. It allows you to visually recognize what's actually going on to the upside and the downside. It should help you in regards to, how to position yourself, look for follow through, what type of trading you're doing intraday, whether you're going to be more so momentum trading or scalp trading. A lot of the times when you get outside days in the market, you tend to get broad rallies, which happen across a lot of different sectors. When you get inside days, you tend to get a lot of relative strength or relative weakness movers, where there are individual names that are not moving within what the market's doing. Or you're going to see a, just random kind of sector going that tends to have relative strength compared to the market. So it's just definitely something to look for and understand actually what's going on. When we talk about on the weekly basis, what we'd be looking at is a week-to-week breakout. So it's a little bit harder to recognize because what you have to do, is at the end of last week, first label the high and the low, and then you can flip back to an intraday chart or an hourly chart, whatever you're using for swing trading. And based off of this, it's going to be the same concept, except we're just using bigger time frames. So if I'm looking at week to week, inside or outside, whether it's going to be inside last week or outside last week, I can see the range at the beginning of this week, which was 414 from last week's low, and the upside of that last week was around 320, 489. At the beginning of the week, I figured it would be more of a consolidative flag type of week where you're going to get consolidation flag pattern forming on the daily, which should be more of an inside week, and it has been. Now, it's had range because it's bounced off of the bottom of the last week's low, essentially, and it's pushing back to the top of it, which it may actually break out. We'll see. But overall, it's the same concept, except we're just using a bigger time frame. Primarily, this is used for intraday trading, but you can certainly use it for swing as well. Anyways, I hope this video helped, guys. Quick little explanation for you there. I get this question a lot. It's a really good tool to recognize when the market's going to be choppy or not, and kind of how to position yourself and change what you're doing. Anyways, that's it, guys. If you have any questions, you go to SpartanTrading.com. Otherwise, thanks for watching, and we'll talk to you guys next week.